Good evening, everyone. This is Dana from NexGen, and welcome to Me Inc. I hope everyone has had a wonderful week. This week in Me Inc., we're going to talk about interest income. Now, interest income is one of the streams of income that we can get. Now, last week we talked about earned income, and we get the earned income, which is active for whether we do it as an employee, we're self-employed, we do it full-time, or we do it part-time. That is earned or active income. So today we're going to talk about interest income, which is, in the examples that I'm going to be giving, is passive. And we'll talk about that a little bit more in a minute. But we first want to define what is interest income. So let's talk about the interest income that a lot of us are used to. So let's say that you use your credit card, you go to buy a car, or you go to purchase a home. If you do not pay cash for whatever you need, you're probably going to be paying interest. So for the pleasure of using their funds, you're going to pay that back with interest. So let's say that you purchased a home for $250,000 and you have a mortgage. Well, you'll not only pay that $250,000 back, but you're also going to be paying additional money called interest. And it's basically you're paying for the use of someone else's money. So that's why we see the mirror here. So what we're going to do is we're going to be on the other side. So instead of paying interest, we're also going to be receiving interest. You can receive interest from an individual, a lending institution, governments, and other businesses. And that's what you saw earlier in the video. And also I'll put it in the description below of the different kinds of interest income that you can receive. So it's basically getting money for lending your money. That's the definition of interest income. So now that we know what it is, and I always like to end in a positive note. So what I'll do is I'll talk about the disadvantages of interest income, and there are some, talk about the advantages, and then we'll go ahead and wrap it up. You know, I always like to give you the full picture, the good, bad, and the ugly. So there are some disadvantages for interest income. And the first disadvantage is you have to have income. And what I mean by that is, if you remember back when we talked about the earned income, we said that one of the advantages is that you can take the money and put it towards the other income streams. Well, one of the income streams would be to put it toward putting it aside in, let's say, a money market account, a certificate of deposit, a treasury bill, a note, or those kinds of things. So one of the disadvantages is if you don't have income or if you don't have any money, you can't lend it out. You can't lend out something that you don't have. So that's a disadvantage. You actually have to have income to do this. Another thing is that it's fixed. And what I mean by that is that usually the interest rate will be higher for the longer you keep it in. For example, if you look at checking, savings, and even money market accounts, you notice that their rates are usually lower than, let's say, a 5 or 7 year certificate of deposit. So basically, the money that you're putting into the bank is actually lending out to other people. So the longer you keep the money in their financial institution, their bank, or their credit union, the higher the interest rate. And that's to incentivize you to keep the money in their institution. Now, if you take the money out beforehand, they do have what we call penalties. So that's what I mean by it being fixed. The longer you keep it in, they give you an incentive, so the higher rate that they're going to pay you. Now, and I put in here that it can be lost. And what I mean by that is that there are risks. For example, on the tax lien certificate, and I'll put the link up at top to show you the tax lien that we were involved in. If a tax lien certificate is basically you paying the taxes for someone else, and in return, they're going to give you your money back with interest. Well, things happen to where either they file for bankruptcy or you don't take the steps necessary if the money is not paid back. Because one of the steps that you have is that you can foreclose on the property. And that comes with other things. For example, you may have to pay an attorney to do these things for you. So having interest income with the tax lien certificate does come with some risk, and you can lose money. And let's say that you put money in what they call a lending tree or what have you. Just like banks and lending institutions where the people don't pay back the money with interest, that can also happen with interest income. So that's another disadvantage of interest income. Another disadvantage is that in some cases, just like the difference between a W-2 and a 1099, some interest income is taxable, some are not. So it would be in your best interest to do your homework. Some municipal bonds may be federally taxed, but not local, state, or city tax. You won't have to pay taxes on those. So those are the disadvantages that I can see from interest income. Now, if you know of any disadvantages or even advantages, please feel free to put them in the comments section, and we could probably address it in future videos. So now that we've taken a look at the disadvantages, let's go ahead to the advantages. Now, this is my favorite part about interest income. And the first one that I can think of is that it's passive. You don't have to do anything. You could be earning money on your certificates of deposits, your money market, your treasury bills, your bonds. You could be earning money on lending out your money, and you don't have to do anything. It's passive. It doesn't require any action on your part. The other thing is that it's unlimited. You can open as many certificates of deposit as you want to, as many money markets as you want to. Now, there are some limits on U.S. Treasury bills, but as far as lending out or getting interest income, there is no limit. Also, what I meant by non-discriminatory, the only thing you have to have is the money, the funds. They don't care what you look like, what you sound like. It doesn't matter. So that is my equalizer, if you will. And of course, we will round that off with the advantages of taxes. So when you lend the government money, they will not tax you on it. So that's when we talk about the municipal bonds, where you're lending money to a municipality. So not all interest income is taxable. So I'll leave a link to the U.S. tax code so you can see what I'm talking about. But these are some advantages of having interest income. Again, if you know of any advantages, definitely feel free to put it in the comments section below. But those are some really good advantages for having interest income. Well, that's all I have for you on interest income. We talked about what it is. Basically, you're getting money back for lending out your money. And it's no different than you being a bank, if you will, or a financial institution. We took a look at some disadvantages of interest income, and it's not really anything that you can't overcome, but it's always good for us to know what we need to do to mitigate any kind of disadvantages. And of course, the advantages of having money, basically making money without doing anything and making money in our sleep. And it could be an unlimited amount. So hopefully this information was beneficial to you. I am definitely looking forward to the conversation in the comments section. So next week, I know you're going to be excited about our next video on Me Inc. and looking at other streams of income. In the meantime, have a great weekend. And for you fathers out there and those father figures, happy Father's Day. Talk to you soon.
Make sure to like and subscribe and hit the notification bell so you can never miss another video.